Good afternoon, ladies and gentlemen. Welcome back to yet another investor briefing. I'm your host, Dan Theox, Senior Vice President of Investment Banking, and today we'll be looking at Jamaica Brawler Group's recent financial results. Joining us online are none other than Group President and CEO Christopher Levy and Group Vice President of Finance and Corporate Planning Ian Persard. Welcome, Ian. Welcome, Chris.
Hello.
Hey, thanks, Dan.
Thanks for being here. Additionally, we're also joined on our panel by our CEO, Patrick Bataille. Welcome, Patrick.
Thank you, Dan.
And Damien Wiley, our General Manager of Asset Management. Welcome, Damien.
Thanks, Dan.
Well, welcome, everybody. Let's get going with the program. So, as usual, if you're a fan of the content, please subscribe to stay updated with our uploads and be sure to hit the bell to receive all notifications. And if you're looking to embark on your very first investment journey, please take that first step with Mayberry, of course. Follow us on social media. Get started today. Okay, so as we promised, guys, we want to jump into the presentation for Jamaica Brawlers Group. We'll be looking at the audited results that just came out, as well as the Q1 results that came out. As usual, folks, if you have questions, please queue them up, and at the end of the program, we'll be happy to look at them. So, okay, here we are. We're going to look at the financial results first, looking at the full year financial results, and we've got the Q4 and the year to date, and I want to focus mainly on the year to date numbers. And as you can see on the first page, first up, we see there's a 5% increase in revenues up to $98.5 billion, a 1% increase in the gross profit up to $13.7 billion, and interestingly, that gross profit margins compressed a little bit at 13.88%. We'll be talking a little bit about that. Then we see distribution costs increasing by 31% up to $3.6 billion. Other income falls by 89% from $2.4 billion to $263 million. Last year's other income included a one-off gain on sale of a subsidiary or some business. We'll talk about that. So that one-off gain of $2.2 billion is no longer there. Additionally, we see an increase in admin expenses by 6% up to $13.7 billion. And combined, that results in what was a $336 million profit last year, translating into a $3.4 billion loss this year. Further on, we have finance costs increasing by 20% to $3.2 billion. And net of taxation, what we see for the full year last year is a $7.2 billion loss, compared to a $3 billion loss last year. And again, that $3 billion loss last year had that $1.2 billion one-off gain in it. So we're really trying to reconcile really from a $4.2 billion loss to a $7.2 billion loss, with the three big drivers being the increase in distribution costs, the increase in admin costs, and so we'll want to talk about those for sure with the guys to have a better understanding. Additionally, in Q4, we can see in Q4 itself, they had an $8.2 billion loss. And when we look at the audited results, just a few things, and I do encourage everybody to read those financial statements for themselves. Just a few things to note. One, they had this big, massive fraud, which we heard about earlier this year, and that fraud's being materially quantified, and that results, unfortunately, in the accounts being qualified by the auditors, PwC, for going concern. Net, the total impact of the prior year adjustment, losses, impairments, fraud, however we want to word that, is a overall write down in the total net assets by $32 billion Jamaican, and an increase in borrowings by approximately $14 billion. So there's a $46 billion hit to the capital employed, which is about $285 million US. So we'll definitely want to talk about, this fraud, this error that happened primarily with the cost of sales, primarily, and then the write down to the biological assets and inventories that caused effectively overall this $285 million loss to the U.S. operations, which consolidates up into the Jamaican operations. And that, unfortunately, when we look on the next slide, when we look at the balance sheet, results in an overall total shareholder deficit, total shareholder deficit of $10 billion. So, that's to say total liabilities now exceed total assets. So total assets of $54.7 billion, total liabilities of $64.7 billion. the financial statement makes note of some breaches of loan covenants, and approximately $30 billion in loans have been reclassified from $17 billion of assets of loans rather were reclassified from non-current loans to current loans, which unfortunately also resulted in the company showing a working capital deficit. So things we want to discuss. Next slide shows Q1 results. So in the first quarter after the audit, they've just released results, and finally we see some good news coming there. We see sales up by 12% to $26 billion, the gross profit up by 35% to $6 billion. Interestingly, the gross profit margin has improved there now from 13.88% last year now to 23%. Then we see distribution cost, unfortunately, increasing substantially. So we want to talk about that. Distribution costs are up by 105%, 108% to $1.5 billion, with those distribution costs now being 5.8% of sales compared to 3.65% of sales last year. But net, business still turns a $1.6 billion profit for the first quarter compared to only $283 million in the same period last year. So $463 million improvement, 463% improvement. So great to see Q1 results sort of turning around. And then net, when we go to the next slide, what that means is what we saw as a $10 billion overall shareholder deficit at the end of their last financial year has now reduced to an $8.5 billion overall deficit. So it's improved by $1.6 billion, which is the profit essentially that they made for the quarter. So I've said a lot there. So big bad news, unfortunately, the fraud case, the fraud error, the accounting error coming to light, causing huge adjustments to the balance sheet, over $46 billion or approximately $285 million, booked in the audited financial results that just came out, resulted in those accounts being qualified, and then followed by their first quarter's interim results where they bounced back with a $1.6 billion profit, showing that they may be down, they may have gotten a little knocked down, but they've gotten back up, came out of the box swinging. So good results there. So where do we start, guys? Ian and Chris, let me see. That's a lot I just said, and I'm going to bring in the panel. Again, folks, you guys can ask your Q&As, and we'll try to address them at the end of the segment. So let me start by my first question. Is the business still there after Melissa? What's happening with the hurricane and how did that impact you? So I want to start there. Chris or Ian, you guys can answer that one.
Yeah, I think without a doubt, the hurricane has impacted Jamaica in a significant way, but the company itself and the assets of the company in Jamaica are good and our sales are good. We do feel the small farmer segment and feed sales will be impacted some because the live sector of Jamaica, our layer business is going to be impacted just because our customers are being impacted. So I think that Jamaica is looking strong and continuing on to look very, very strong, even with the hurricane. The relief efforts are ongoing, obviously, in terms of just supporting very many agencies. And I've been down there a couple of times and it's very bad. So any support that can be offered and given will be worthwhile.
Good deal. So when we hear talks of 1 million birds, possibly, being destroyed during Melissa, I mean, how does that impact you exactly? Are those layers versus your birds? Are those the small farmers' birds versus your assets? Help us have a feel for.
Yeah, it's a combination of layers in the industry, and that's the table egg industry, and then also small farmers that are the backyard farmers that make up the backbone of the industry. They've been hammered as well. But a direct impact are our layer farmers in the country.
Got it. But as it relates to your hatcheries and your main assets here in Jamaica, you have no notable damage.
No damage at all. We're good and running. I mean, we've been up and running. The support that we've got from the various vendors that we have has been great. We've got JPS power back where we need it, and the operations are running good.
Good deal. outlook for the next quarter because of the hurricane. I mean, the hotel sector has been impacted. I would imagine that's, easily 15% of your revenues, thereabouts. So would you in general say, though, you would expect the next quarter to be a little bit slow in terms
I
of
think
sales?
I think then quarter two will be okay. I think
Okay,
quarter three we're going to see more of the impact coming through in quarter three.
got it. Because
Yeah.
quarter two is up to November, really, yeah? End of November,
Correct.
more or less.
Yeah.
Okay.
And the point you made on the hotels, I know they're working hard to get back up and going. But when you look, Montego Bay, which is our second largest market, has been impacted. The hotel segment impacted. The rebound will be quicker there than what you call the South Coast agricultural belt. But I think quarter three is where we're going to see more of that
Just
challenge.
slow down in sales, perhaps. Okay,
Yeah.
good deal. Patrick, let me hand over to you for one or two questions.
Sure. Thanks, Dan. So, my question or my first question is, following what's occurred in the U.S. operations, what controls have you guys put in place for, financial oversight and, essentially trying to prevent this from happening again?
I think, Patrick, there are a couple of things that happened here in the United States that we've changed. We put in an entire new accounting team here, and we have very specific reporting relationships changed back into what I would call the Jamaica Financial and Accounting Network. We've also changed our auditors, and one of the things we will be doing is for quarter two, what I'd call a desk review. That's what they call it, a desk review of our accounts here prior to releasing our numbers. In terms of the other on the ground stuff that we've done is we put accounting folks in our strategic locations. And then finally, we're going to be enhancing our internal audit work up here.
Okay.
So let me lead off on that. So, again, to put this into perspective, Chris, Ian, the prior adjustments, impacted, even last year, we're talking about an $11 billion write down to your cost of sales. If this relates to the U.S. business where, sales are only 37 billion, it's like a 30% adjustment. So your cost of sales was wrong by as much as 30%. You ended up writing off, tens of billions of dollars of
Yeah.
value in terms of biological assets and inventories. I mean, how
I
does
think
an
that-
how does
let
an
me
error of this magnitude happen?
Well, that's why I wanted to jump in a little bit before you kind of went on. But I
Sure.
think what was happening is that the cost of sales were being underestimated and or underreported, and those numbers were being hidden on the balance sheet. So that's why there's these large adjustments on the balance sheet that has taken place that then have to flow through. The primary, let's call it accounts that were being used were biological assets and inventories. And what we have up here is a conglomerate of 7 different companies. So we'd have biological assets moving and intercompany stuff that was happening that was hiding all of this, hiding the cost of sales or the true cost of sales that should have been incurred to the P&L during that time.
So the costs had moved into the balance sheet, capitalized into the balance sheet, but weren't being transferred into cost of sales in sync with the actual sales as they occurred.
That's correct.
And again, that the magnitude of that error is, roughly 30% of the sales when you
Yeah, well, I think this has been going on now for about 4 years.
Right. So there's an accumulation of errors over 4 years.
The accumulation over 4 years that we're correcting here.
Correct. That your team went in and discovered, right? The auditors didn't find
Yeah.
this.
Well, that's another question, but I think the yes, we came in. The first thing that really tweaked to us was we're seeing the profits, but the cash just was not
In sync.
there as expected.
Mm-hmm.
And when we got in, what was happening is the vendor financing was considerably more than was being reported. So that was funding some of the losses. And the point had had gotten to such a point that there was contamination happening to Jamaica with some of these cross vendors.
Right, right.
And that's when we said something is completely off the rails here. And basically when we came in and we started to really dig and get into it, it was we could not figure it out. It was actually a whistleblower that pointed us in the direction that we needed to look.
Mm-hmm.
And once we did that, the entire my word, probably not the right word, but the entire scheme just unraveled in a matter of 2 months.
Right.
And it was just, there was a period of time there that every day you're just waiting for the next blow, the next blow, the next blow. And it just kept getting deeper and deeper and deeper.
And explain so I understand now the cost of sales error relative to what was capitalized in the balance sheet. Explain the unrecorded liability or borrowings, the $13.5 billion that you sort of discovered was some kind of off-balance sheet financing going on.
Yeah, they were using some free text invoices as well. So there are a lot of accounting irregularities that were taking place that were not picked up by the proper procedures.
So off-balance sheet financing, essentially, that you again unraveled. Do you think?
Dan, maybe I could come in and just support
Please, Ian.
Chris on it.
Please,
Yeah,
Ian.
and maybe just if we step back 1 second, I think is very important, you know,
Yes.
Dan, you and the panel and your audience here to understand how we bracket this issue.
Yep.
You know, when you look at Jamaica Brothers Group, let's think of it as 4 engines that is propelling the group.
Right.
We have 2 in Jamaica in terms of Best Stretch Chicken and Hypro.
Yep.
And we have 2 engines in the US. We have the fertile egg business and we have the meat business in the US. The fertile egg business for decades has been doing extremely well and continues to do very well. All of the issues that we have been discussing and highlighting so far, including in your introduction, all is isolated to the meat business in the US.
Got it.
As Chris indicated, you know, there were various things that were happening which should not happen. And one important thing that was done through our attorneys, and so I can share a little bit, but not a lot of details, is that a forensic audit was conducted specifically on the inventories and the biological items. And 2 findings came out of that. The first one is that the overstatement was in fact due to the fraudulent transactions, as Chris indicated. And the second thing is that it spanned a number of years. Now, the importance of that is to then answer the question, well, how come this went undetected for that period of time?
Yes.
And when you have this kind of coordinated and deliberate efforts by the leadership, that's what makes this difficult. I mean, we're talking about, let me mention 3 different set of auditors here. First, we had the auditors of the US that for multiple years did not pick up any adverse findings. And so clearly they were misled by the information that they had. We have a banking syndicate in the US that is led by one of the top 3 banks in the US. They have their own auditors that come in and audit the borrowing base facility that we have. So they check inventories, they check biological assets, receivables, and payables. There was no adverse findings from the bank's auditors. And then, of course, we have our group auditors that review all of these different audit reports, etc. And over all of these years, there has been no adverse findings. So that's the difficulty when you have this kind of coordinated effort to be able to uncover it very quickly. It's not very easy.
Understood. And so the biggest issue was the cash being king, not seeing the alignment between the profitability being reported and the cash actually being generated. That's what sort of spiked your interest and got you guys doing this deep dive to try to figure out this problem
Yeah.
yourself. And the business that you sold last year on which you made the gain, it was a part of the hatchery business. You sold one of the hatcheries, remind us?
Yeah, we sold a hatchery 2 years ago. That was a one-off.
Gain that we
The
saw in that.
hatchery in Iowa, we liquidated.
Very good. Okay, I feel like Damien had been hogging the show. So Damien, tell me any questions
Yeah,
from
sure.
you.
So, Ian, can I just pick up on something that you just said, right? So, what gives you the confidence today that the financial reporting that you've implemented in the US segment is it now stable and now reliable? Because as you've pointed out, there have been multiple instances where your auditors would have checked and everything would have seemed okay. So, what changes have you made, and how confident are you that those changes will prevent a recurrence of what's happened so far?
Yeah, great question, David. I think Chris alluded to some of them before, but I'll just add to that. We had a couple of important professionals that were engaged right at the offset. IBM team came in with our own IT team, and we did a full review of all the processes and controls. And where there was breakdown, there was immediate reinstatement of those. Those reinstatements coincided with a change in the leadership team at all the operations. I mean, we replaced the leaders in every single operating entity within the US group. And simultaneously, we put in the controls to make sure that the protection that we needed were then operational. And we did that in conjunction with IBM. The change of auditors in the US is another very significant event, Damien. Our new auditors are very experienced in the middle market in the US, and they have a lot of poultry experience. So they understand the business. These guys know where to look. They know what to look for. And they have a lot of different frame of references that they can pull on to validate externally out of our information what is reasonable and what needs to be checked in a little bit more detail. We spoke a little bit about the forensic audit. I mean, we have gotten a lot of input from that team as well. There is also oversight of the US accounting and operating functions from very experienced accounting folks here in Jamaica. Of course, we run an integrated poultry business here in Jamaica. And so, our folks here in Jamaica are very have intimate knowledge in terms of the details and what needs to be looking out for and the things that need to be done. I mean, we're talking some basic things at times, making sure when an accounting period is closed, that you actually close off the system and it doesn't allow any postings to happen after the accounts are closed. Basic things like making sure that your subledgers reconcile automatically to your trial balance and your GL. And if those, and make sure that those things are turned on within our ERP system. Those are some of the controls that Chris mentioned before that we have really focused on to make sure that we don't have any kind of reoccurrence of this. And we are very confident now in terms of the numbers that we're producing. We are looking at the numbers not only from a financial standpoint, but from a unit cost standpoint, the cost build up in the meat business, the cost build up in the fertile egg business. And it's a good way to validate what is there because we do have the comparative with the Jamaican operation, and there's other international benchmarks that we have available to us as well. So I do believe that we are very confident in terms of the systems that, Chris and the team, the accounting team in particular, have been able to put in place.
Okay, great. Thanks. Dan?
Yep. So follow up on that. So you came out the Q1 results. They're really great, 1.6 billion, and you're saying, as far as you are aware, you've cauterized the problem. We're not going to come back next quarter and say, oh, here's another 3 billion that we missed. Have you more or less completed the investigation from the numbers perspective, and there's nothing more to come, Chris and Ian?
Yeah. Yes, the closet is clean.
Okay, all skeletons have been
All
exposed.
skeletons have been removed. I think, like I said, I think Q2 will be all right. I think Q3 is going to be a tough run.
Right.
From
From a sales perspective in Jamaica.
Yeah, Jamaica, but
Right.
also meat prices in the US have gotten very low.
Right.
And I think we're going to face some challenges on that. The fertile egg business, as Ian mentioned, is pulling strong. I mean, really strong. But I don't think it's going to be enough to offset the challenges that we face in the meat business. So I think strategically, which is I think important, is we really set out to get this meat business turned around in the first quarter of the year, which is what you're seeing in terms of the results. But as the meat prices have dropped out of bed between November, December here, I think that the decisions that I'm looking at here and the team is looking at broader might change our direction a little bit.
Got it.
So
Patrick?
we're not sure just yet, but we definitely are not. I'm not happy with how we're structured here, and in terms of our competition and what we're looking at.
Got it. Patrick, any more from you?
Sure, just to piggyback on Q1. So it looks like Q1 was a strong return for you guys, or a turnaround. Can you highlight what were the key operational changes that contributed to this, and how sustainable is this going forward?
I think, Patrick, the biggest turnaround that we saw in the group was around the meat business here. I'll give you an example. Remember, our cost of sales were understated. So when we looked at our cost of production for meat after adjustments and stuff like that in February and March, we were running about $2 a pound in terms of costs. Right now we're at $1.35. The operational changes that we've made here are tremendous, and they've been aggressive and fast. I can't follow the meat price, the revenue side down that is going. But what we're seeing here is really around the meat side challenging us. But the fertile eggs are up strong, as I mentioned. And what we're seeing in terms of Jamaica is just that good, consistent, cash cow, steady business. Focusing on efficiencies, what I'd call the co-generation and the value there that we've come in as is starting to show as well. So there's some of these things, but Jamaica is great and steady and a cash cow. So out of the 4 engines that out of the portfolio, 3 of the engines are pulling really good, but 4 is lagging in terms of the meat, and I want to address that over the next couple of months.
So, Chris, on that, I have a question from my group chairman, and it's with regards to the bird flu situation that we're seeing currently in the U.S. Is there any impact or potential impact on your U.S. operations, given your focus on the meat industry?
The last report, that I got is that the bird flu, I'm going to answer you, but right now there's a lot of pressure on with the bird flu in the duck industry. That might contain we might get contagion over to the poultry industry. But for us, what we're seeing is we're good on our meat side in terms of that. I hate to say it this way, but for the fertile eggs, it's actually it's not a bad scenario because it's pushing fertile eggs up in terms of pricing.
Gotcha.
You don't want to benefit off another man's challenge or suffering, but what we do in the fertile egg industry here for us is we literally sell insurance for when big companies get challenged. We're able to supplement their fertile egg needs, and we're seeing that both in Canada and Latin America and the US. So our fertile egg pricing is very good. On the meat side, we haven't had any challenges in terms of our flocks at all.
Okay, great.
Very good. So Q1 results in general are pretty good. I would say there was just one little concern for me, and I'm sure you can answer it. And it was just trying to understand the increase in distribution costs. So we sort of noted that the distribution costs looks like they increased by 50%. They're now up to 5.83% of sales. Could you give a little color on that?
In terms
For the quarter.
For the quarter.
Yeah.
Dan, I'll tell you, I think it's a combination of volume moving and some what I would call in terms of just Jamaica and the US. We did push our volumes up in the US. But in terms of a detailed breakdown, I don't have that offhand, but I can get it for you.
Sure.
Just because there's so much distribution we do, but I can look at it in more detail.
Sure. No issues. And
I'm
then
not sure, Ian, if you have an answer offhand.
Yeah, while I don't might not have a full answer, I think a lot of it surrounds the meat business in the US.
Yeah.
You know, there's a lot of logistics in the US. We're talking about, you know, moving baby chicks from Iowa and Pennsylvania to South Carolina, feed from, you know, from Georgia, mailing to South Carolina, and then distribution of the products in the meat business. And we did go up some in volume on the meat business as well. So most of it done, it's more expensive distribution as it relates to the US meat business.
got it. Okay, that helps.
And also, I think, Dan, now that I think about it also, a lot of that distribution costs would, I'll break it out and send it to you, but
Sure.
it also includes fertile eggs
Okay.
distribution. And we do a lot of over the road hauling, Canada, Mexico, them sort of place.
Okay. Well, the business is still profitable. I was just curious, why was there this sort of jump in the distribution costs, and then
We
interestingly,
can drill down into
interestingly, a reduction in the admin costs. I don't know if it's just a reclassification there.
that.
Patrick?
Yeah.
So, Chris, Ian, one of the questions I have is, you know, with the adjustments that have been done, have there been any discussions with your lenders, anything around covenants and refinancing discussions that investors should be aware of?
Sure. I'll let Ian jump into that one, but yes, Dan says yes, and Ian can unpack that for us, Patrick.
Yeah, happy to, Patrick. So as you can imagine, there has been a lot of discussions over the last year with our lenders. And this lender group is on both sides of the pond, right? So a lot of discussions with the lenders in the US and a lot of discussions with the lenders here in Jamaica. I think it's really noteworthy, first of all, as a general statement, to say that the level of partnership, cooperation, support that we have received from all of our lenders has been absolutely tremendous. Even earlier this week, our attorneys in the US had an exchange with the attorneys for the banking syndicate in the US. And they just came back and commented that, you know, usually these discussions can get very aggressive and folks can take different positions. And they just continue to be amazed at how well the discussions have gone and the partnership that has remained. To the extent that when the US syndicate bank attorney asked if it is that we would be requesting a formal forbearance agreement, our attorney said, I don't think we need to. I mean, we have been just working so well together that it would be good if we could continue on the same basis. And their attorney said, fine, great, let's do it. So that has been unbelievable. And now Jamaica, it's been, you know, equal, if not better, quite frankly. We have a syndicate of lenders here that have been very supportive of us. We have seen a particular financial institution come out publicly in support of Jamaica Brothers, and I don't mind saying that it's National Commercial Bank. We are in the very, very last stages of concluding an extremely complex refinancing package that includes all of our lenders. It has a number of features in it, so I don't mind spending a minute or two to kind of just explain what they are. The first thing is that this deal is not a syndicated deal, but we can consider it like a club deal. Multiple lenders, multiple banks, and bondholders are included. We're talking a total package of $24 billion, so it is very significant. We're talking about bondholders and banks agreeing to common loan covenants and condition, agreeing voting rights. We are moving to secured borrowing from these banks and bondholders. Currently, all of our borrowing is unsecured. That means that we have some real complex agreements dealing with. You know, we're dealing with an intercreditor agreement. We're dealing with security documentation, bondholders agreements, a collateral agent agreement, And that's all on top of individual loan agreements that would have existed with some of these banks. The financing is a combination of bonds and a bank loan. The bonds have tenors that span 3 to 14 years. I would say market rates in terms of coupons being anywhere from 10.5 to 11.5, depending which tranche we're talking about. And then the bank loan, which is about 4 billion, is an 8-year tenor and on a WACB floating rate basis. So we're just about at the conclusion of this. We had to do some revaluation of some of our assets, which is going to have a positive, not only as it relates to facilitate concluding on the financing deal, but I'm sure we'll talk about the positive impact of that to the balance sheet in another area. But happy to report that so far everything remains on track, and we're looking to close this up in the next 2 weeks or so. And the immediate impact of that on the next balance sheet publication is that the current liabilities, which were classified
Will be
from
reclassified to long term.
the current is going to be reclassified back to long term.
Great. Just to pick up on that. So, which KPI should investors be focusing on going forward to monitor the alignment between profit and cash generation? Because based on everything you've said, it sounds like JBG has put in place the things that will see the company going back to the company that we've grown to know and love and cherish. And so, what are the key performance indicators that you think investors need to be focused on for the next 2 to 3 quarters?
Happy to share. I think the key ones really boil down to the working capital components. So when you look at profit from operations and cash flow from operations, the usual reconciling difference in those numbers come down to our inventories, our accounts receivables, payables, biological assets to a large extent. If you look on Q1, for example, you will see that our inventories have shown a significant increase quarter over quarter. That, in fact, is something that was deliberate. We started our buildup of inventories of finished chicken products in Jamaica well in advance of the Christmas season. It's turned out with the hurricane that is actually turned out to be a double blessing for us, because we have very, very significant stocks of finished products that we are able to fill some of the void. Unfortunately, our small farmers that have had a fallout, and of course we'll support them in terms of their rebuilding through the Hypro brand. But we do have very significant finished product of inventory that we can carry through until they get up and running fully again. So that's one of the metrics that will come down in value and free up cash in Q2 and Q3. But those are the elements really for folks to pay attention to, Damien.
And the key debt metrics, seeing that you guys are going to be focused on with your lenders, could you speak to two of the key debt metrics?
I would say for me, there is one significant one, and that is the overall level of debt. President Levy indicated that, we did put a lot of time, energy, and resources behind a turnaround of the meat business in the US. Again, I don't want to overemphasize, but the issue that the company faces is really isolated to the meat business in the US. Resources have been put to have a turnaround in that business. And from here on out, I think the goal for us is that we need a steady deleveraging of the company to get our debt ratios back in line with where we're comfortable as a company. And for me, that is the number one debt metric for us to monitor. And of course, the way that we're going to do it is by earning our way out primarily, and then being smart with some of the non-core assets that we may have available to help us to accelerate that process.
Very good. And staying with you a little bit, Ian, just, speaking numbers, which you and I can more than appreciate. So we saw the share price close at $18.45 today, sort of down from $23 The previous day, I mean, market cap therefore has reduced by over $5.5 billion, falling from 28 billion essentially to $22 billion. And, I think folks who've seen the stock price fall sometimes forget that you guys are shareholders too. So I do want to give you, a moment or two to speak about that sort of recovery plan and try to help build back investor confidence. So we've sadly seen, the business has a $7 billion overall shareholder deficit. You just turned $1.6 billion in this quarter. We asked if that was sustainable. So, assuming it is, if you can, do even 1.5 billion a quarter, it means you've got to work really hard for the next 4 to 6 quarters to try to come out of the red. Obviously that's going to impact, free cash flows to pay things like dividends, because your focus has got to be more about on trying to reduce debt, stable the ship, grow the business. So in my mind, it would probably suggest that dividends are going to be very tight for the next 4 to 6 quarters. The focus is on rebuilding the company. And I sort of want to appreciate, how you guys are feeling about the next 4 to 6 quarters and the work that you have to put in to build back shareholders' value. You guys, both of you, are big shareholders. You're not just employees of the company. So I would like to sort of hear about the thought process for the next 4 to 6 quarters on rebuilding the business.
I'm happy to answer Dan, but I think I'd like to maybe defer to Chris first, and then if he needs any support, I'm happy to jump in.
Thank you. Dan, I think that's a very a good question. I'll be honest with you. I think the focus of rebuilding this company over the next 4 to 6 quarters is top of mind. We're going to have a tough Q3. I think we're looking at a strong Q4. And then, as Ian mentioned, is debt management thereafter, or top of mind there. The challenge that we do face is what I call the overall liquidity of the company is certainly tight. There's no doubt about that, and we'll see how that plays out over the next 2-3 quarters, which we'll get a good line on. The fertile egg business, as I mentioned, is strong, and we want to continue in that vein. We might be taking some difficult decisions on the meat business. We'll know, like I said, we'll know over the next quarter or so. And I do expect Jamaica business to continue strong and continue developing and being very cash positive on it. The opportunities that I think we're going to have to be very disciplined around. Like we mentioned, we want to stabilize the boat. We want to make sure that we get our legs back under us. This has been an extremely difficult period and a very, very challenging time on many, many levels. The bottom line on this, though, is that the company is good and the company is strong, and we have great financial partners that have vision with us in this organization. We have a great set of staff and leadership that have really tucked in and worked and gone above and beyond. And I think as we navigate the next month, 2 months, 3 months into that, I think it will definitely platform us for the next, let's call it next 4 quarters kind of thing.
Patrick?
So I'm very optimistic. We have another, I'll be honest with you guys, I think we have another, like I said, 2-3 months of just challenging. I have to make some decisions on this meat business.
Right. Hear you loud and clear. Patrick?
Sure. Thanks, Dan. So this one, I know, Ian, Chris, answer it as possible you can, but I'm sure this is a question everyone wants to know. Is there any possibility of recovering any of the losses?
That's a very difficult question to answer at this point. We just got out our reports. I'm not taking anything off the table at all, Patrick. We're talking very big numbers. We're talking significant impact to all of us as shareholders, and obviously increasing the risk profile of the company. I do feel that our attorneys and our advisors will be a little more focused on that now that the audited results are out. We do feel that there are some tax opportunities that we'll be able to realize, and we've quantified it, but we just want to make sure and restate our tax positions here. The other elements of recovery are a little bit more sensitive to get into, but no option is off the table.
Okay.
All right, good deal. Damon, any more questions
Yeah,
for you?
I just have one more question.
Yeah.
So the group paid about roughly 511 million in dividends in 2025, despite the net loss and negative equity. How are you thinking about the dividend policy going forward until the balance sheet is repaired?
I think, Damien, the dividend policy is 20% of profits, after tax. I'm not saying we're going to change the dividend policy, but I'm going to tell you that I think that I think it's going to lean a bit more to a cash-based situation more so than what I'd call just sticking to the policy. I think it's ridiculous to borrow money to pay dividends. So I think we want to make sure that we're in a position that we can that we have the liquidity available to us to pay the dividends. Now that being said, as a large shareholder, I miss my dividends too. So there's a lot of incentive personally to get this policy back on the road. But again, that will be in consultation with our financial partners and all the various stakeholders that we have to consider with a decision like that now.
Okay.
And Damien, if I may just add one important element here, because you did mention about the rebuilding of the balance sheet, which is very, very critical. We spoke about one component of that earlier in terms of the expectation that we'll be able to reclassify the loans, back into long-term obligations in the very near future. But there is another very important element of the balance sheet to be repaired, and that is the shareholders' equity. And, Chris has kind of brought the team together when we kind of saw this coming down the road. And a couple of things were decided, and we are executing on them as we speak. The first one is, having done the revaluation of some of our assets in Jamaica, we are looking at a potential uplift of approximately $40 billion to be reflected by the time we get to our Q2 release. What that means is that we'll see our PP&E number going up to about 61 billion, and our shareholders' equity will have a positive injection of that 40 billion. So we'll end up somewhere roughly about positive 32 billion. That is a remarkable rebuild that we would be able to demonstrate to shareholders and the market in a 6-month time frame. But we're not stopping there. Yes, Chris has indicated that we have had a couple of bumps in the road on the meat business. We'll see some of that in Q2. It will probably touch down a little bit more in Q3. And again, this is only as it relates to the US. But the focus is on generating profits and building that retained earnings number so that we continue the upward trajectory of rebuilding that shareholders' equity. And the last one is not by any means an insignificant number, but it's a lot more complex. It has to do with the potential tax credits in the US operations. The challenge with it is that, of course, we're going to have to go through refiling and then most likely a negotiation with the IRS, etc. But we do have good tax advisors that can guide us. One of the challenges is, will we have the kind of profits in the short term to be able to utilize those tax credits fully. But again, if we had, I mean, the number we're talking about is close to 30 billion, of which we have said, if we're able to realize a third of it, 10 billion shot to our shareholders' equity would be a very, very significant number as well. So rebuilding the balance sheet from a number of perspectives is one of the focuses that we have. But the key one is the performance and profitability to drive that recovery, because that is the one that's going to be sustainable over the months and years to come.
Great, thanks, Ian. Thanks for that.
Okay, great. So we got a few questions online, and in the next, over the next 5 to 7 minutes as we look to wrap up, I think we should take a couple of those questions. Patrick, you see any online that you want to put forward?
So I think we've covered this, but just to reiterate it, what assets are included in the 40 billion revaluation? Majority PPE or biological? Any of that tangible? And also, could you roughly break down how much of that is U.S. versus Jamaica? I think we've covered a good portion of it, but
Yeah.
Happy to give a little clarification. So most of it pertains to assets in Jamaica, and it's assets related to land and buildings only. We are not necessarily looking at booking revaluation of equipment, because that can get very, very detailed and technical as you start to list every piece of equipment and do a revaluation on them. But we do have significant holdings of land and buildings and specialized buildings in a number of areas. And it's those specialized buildings, particularly things like cold room and different kind of flooring structures to house engines at the cogen plant, etc., that have resulted in the uplift to our PP&E number.
And these are the same assets, I suspect, now that you're going to use as collateral for the loans when you mentioned the loans going to become secured.
That's correct.
Yep, that's right.
Good deal. Anything else, Patrick, you seeing online?
no, I don't know if you see anything that you wanna.
Yeah, just wanted to, since somebody asked JGT 220, how much do you expect the hit from the tourism sector to impact you? So I don't know if you want to sort of speak more towards tourism in the third quarter, and or conceptually how much of your revenues in Jamaica are exposed to tourism. So how can people think of the tourism impact to you if we were to see tourism slow down for an entire quarter? How would that impact you?
I think the impact on best dressed chicken in Jamaica is going to be relatively insignificant. I think we're still looking at a fairly robust season, because remember, the season really picks up after Christmas. And I think we're looking for where I think we're going to be challenged is on the high pro side with layer feed and baby chicks, those sort of things. I think we could project on that. Overall, on the Jamaica side, I would say we're probably going to be about 5-6% on that revenue target.
Okay, I think that helps.
Yeah.
All right. Well, I think with that, we've covered most of the questions. We've sort of hit the time limit. Ian and Chris, we really appreciate you guys' time. We'd love to have you back at the end of the next quarter so we can see how things progress as you guys try to dig yourself out of this hole, so to speak. No pun intended. I think the first quarter results is very encouraging to see you come right back out with $1.6 billion of profitability after taking big write-downs all the way down to $10 billion in shareholders deficit. It's encouraging to hear about the revaluation of the fixed assets. It's encouraging to hear that the bankers are on your side, that you've substantially resolved those issues. So perhaps in the next 3-4 weeks, we'll probably see some announcement from you guys that speaks to this groundbreaking club deal, which will help to release quite a bit of your current liabilities to go back long-term debt, I think about $17 billion. So the next quarter's balance sheet will certainly look much better from the working capital perspective. So it's encouraging to hear about the improvement in the banker situation, to hear that you've got that full support. It's encouraging to hear that you've brought the problem under full control, so no more skeletons to be found. And what you guys now need to do is work really hard over the next 4 quarters to build up back the balance sheet, get the debt under control, get the operations going. It's good to hear that Melissa did not impact you directly, any of your assets, and yes, there may be some impact to your feed sales to the small farmers who've lost the birds, who bought the feeding from you, although no direct impact to your assets. So it's not all bad news, folks. Definitely got a punch to the gut. There's no doubt about that. It's also encouraging to hear that you've still got your attorneys on the case, looking at all of the possible options, because just like us, I'm sure you guys feel like justice has not yet been fully served. We need to fully get to the bottom of this matter and find resolution for all shareholders. So, Jamaica Broilers Group, folks, no matter what anybody says, is still, one of those companies that it's hard to bet against. They've been around for 50 years. I'm going to bet they're going to be around for another 50 years. And the next 4 quarters are going to be about building back up. So we want to watch carefully the road to recovery, to see you guys continuing to turn at least $1 billion a quarter. I'm going to say that's the floor, Ian. If you do less than 1 billion, you get the bat from me, or the whip. I'll say the whip, since Ian is into the horse racing business and understands the whip. So less than 1 billion, Chris, you give me permission to use the whip on Ian. So
Boy, we're working hard.
billion a quarter. And then we appreciate you taking a look at the meat business and trying to really assess that business. And
Yeah.
then lastly, it was encouraging to hear about the big tax credit that's potentially there on the table. That's actually an asset should you
Yeah.
ever sell that business, just letting you know. But certainly an asset as it relates to the future profitabilities that you generate from that business, the offset that you could get there. So not all bad news, Patrick, if you ask me.
Definitely true, Dan. Definitely true.
I miss Chairman Berry being here because he's like really shrewd, Chris, as you know, and he's got great vision. But I really do feel like I'm feeling a lot better having spoken to you two, having spoken to Chris and Ian, than when I read the financial statements with the qualification of the accounts for going concern at that, right? But I do appreciate the auditor saying until you resolve this bank issue, the bankers could collapse the company. They could call the
Yeah.
loan defaults, and the liabilities in that moment exceeded the assets. So it's great to hear of all of the recovery things you're doing to address those problems. And I feel very confident, and I would like to watch this journey over the next 4 quarters. But I feel very confident that you guys are going to bounce back. Folks, the share price is down to $18, but this is a stock that once they get going again, I would expect in a year's time that we're going to see at least a 50% improvement in that in the next year. So it's still a great time to buy, guys. I think at $17, $18, I would buy this in my sleep, because it's going to turn around and we're going to come back one day and see these results doing much better. And it reminds me of Carb Cement, 12 years ago when that stock price was at $4, and you were like, there's nothing wrong with Carb Cement. They've got some debt issues, they got some distribution issues. They need to work through that. It's a solid business. It's gonna come back. And here we are 10 years later. The stock price was at $100 today. I sold a couple tens of thousands of units, making a 300% gain on a part of my portfolio. It took 8 years for me to watch that play work out. I think in less than 2 years, we're going to see the stock price rebounding substantially. So guys, it's still a good time to buy. You don't just buy when the water is flat. Sometimes when the water is choppy, it's a good time to jump in. So my few cents, Damien, I don't know if you have any,
Agreed. You fully
any
covered
comments
it.
there.
You fully covered it.
Yep.
As I said, Jamaica Brothers is a household brand, strong Jamaican brand, and I think that based on what we've seen and heard from the leaders of the company today, it definitely bodes well for the next 4 to 6 quarters. So fully endorse what you're saying there.
Appreciate that. Well, Ian, Chris, again, thanks for being on the program. Folks out there are lots more great results to look at coming up over the coming weeks. We've got Wigton, we've got NCB. These guys are all hitting back, coming back strong. Next quarter, we're going to talk again back to the Jamaica Broilers team. Really appreciate you guys as usual. That's it for today's discussions. I'd like to thank our viewers as usual for tuning in today. Your support is always appreciated. Of course, special big up and thanks to Mr. Christopher Levy and Ian Persad. We appreciate you guys for coming out. Thank you for my fellow panelists, my CEO, Big Boss Patrick Bataille, and my brother Damian Wiley. Thanks, guys. Really appreciate your support. Viewers, be sure to look out for our future updates on virtual investor forums. I think we got one coming again on Monday. That's going to be Wigton. And then hopefully we'll get at NCB later on in the week. We share all things forum related on our social media pages. Please check them out. Tune in at 6 p.m. when we're going to look at the Q2 results for Wigton with Gary Barrow, the Wigton CEO. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Remember, wise investors, keep safe. Slow and steady wins the race.